All right, so here's my weekly Questrade stock market portfolio update. So as of October 30th, my portfolio total equity with Questrade is sitting at 99,194. In my margin account, I've got 0 Canadian cash. I've got 45 US cash. But of course, it's not, I've got open orders, so they're not closed yet. It's not confirmed that it'll be the cash remaining because I still have to pay to close some trades. So if I go to my positions, it's mostly put spreads. So I've got a put spread on Adobe, put spread on Amazon. I've got an iron condor on Amazon for November 20th. I've got Boeing, an iron condor. Got a put spread on BIIB. I've got an iron condor on CHGG. I've got a put spread on Fiverr, Google, Lululemon. I've got an iron butterfly on MasterCard, which is going to be a loser for sure. I've got a put spread on 3M. I've got a put spread on Netflix for November 6th at a 460 strike. And I've got an iron condor on Netflix for November 20th. I've got a put spread on Nvidia at 475. So I pretty much have a lot of positions. I've got a naked put on Rocket, which is doing terrible. But naked puts, I can always roll for a credit easily. And because it's a small price stock, it's not going to take a lot of buying power out of me. So that's why I'm not concerned about it. And I'm basically just testing out rolling naked puts with this trade. That's the only reason I got into this, because it was a cheap stock and premiums are good and I wouldn't mind rolling it forever. I've got Shopify at 865 when it dropped on Friday. I've got Spotify as well at 220 put spreads. So most of them are put spreads. I've got SPY, I've got Tesla, I've got UPS, I've got Visa, and I've got 2 ZMs. This first ZM here got breached on Friday. In fact, as you can see, it closed at 460. So it broke my short strike of 465. So I might have to take some action next week on Monday, either by selling a call spread a little bit higher, maybe at like 520. Maybe I'll sell a call spread at 520, 525 to mitigate this trade. So which ones am I concerned about? Well, because of Friday, when everything dropped hard, Adobe got breached as well. Not breached, but came close. It was trading at 460. Now it's at 447. So I'm still 17 points away, but it could easily drop next week. Amazon, I'm not too worried about. In fact, I might sell another put spread on Amazon for next week, maybe a little bit lower, maybe 28.50, depending on how the market acts next week. This one was a put spread that I rolled to November and then decided to sell a call spread against it when Amazon dropped after earnings. So just trying to collect some extra credits. So the put strike has been breached because Amazon's at 30.36, but I still have until November 20th. So I'll slowly bring down the call spread all the way down to 3,100 if I have to mitigate the loss. So it would end up being a loser, but at least I turn it into a small loser. Boeing was an earnings trade that went bad, so I sold a call spread to mitigate. This was a put spread I opened last week. It should be good, although next Friday they're announcing some FDA approval or something, so it could completely breach the low side or it could completely fly. So who knows what's going to happen. So it's like an earnings trade, basically, this one here for next Friday. This one was an earnings trade. I still have time, but I'm not that worried. It's at 73, I think, right now. Yeah, it's at 73. So it breached the put side. Fiverr was a winner, but because the expiry was very far, I wasn't able to close it. But Fiverr was a winner after earnings. It's not breached. As you can see, I'm at 120 and Fiverr's at 146. But it's just that it's so far away, I'm not able to close it for a profit. Google was a trade that I got scared before earnings, so I decided to roll it to November 20th. But of course, if I kept it, it would have been a winner because Google flew after earnings. Now, was I able to close it after earnings? No, I wasn't able to close it after earnings, but we'll try for sure as we get closer to November 20th, as long as Google stays above 1520. Lululemon I opened last Friday, so not too concerned about it. It's at 320. MasterCard, this one's a losing trade for sure. It was part of an earnings trade. 3M should be fine, but I have to wait till November 20th. Netflix is getting close. I mean, 475 versus 460, but we'll see what happens this week. This one's for November 20th, so I have time. I might bring the call spread a little bit closer to collect more premium. I'm at the 535, 540 call spread should be profitable quickly. I can slowly bring it down closer to 485 if Netflix stays below 475. But I don't think Netflix is going to stay down. I think Netflix is, even if the market tanks, usually Netflix is stable or actually goes up, depending why the market is dropping. Nvidia, I'm at 475, stocks at 500, so not that concerned right now. Shopify, not really, 925 versus 865. Spotify is, I think, 240, 240 versus 220. SPY could be a little bit dangerous. I'm at 315. I've got a short strike at 315. SPY's at 326, but Friday it reached 323. And who knows how it will open next week. It expires Wednesday, so it expires November 4th, which is a Wednesday, yeah. And I've got November 20th SPY. This was a 340, 335 put spread that I rolled to November 20th, which I didn't have to. It would have been a winner if I kept it, but I rolled it for a credit, and now I sold a call spread to mitigate, because obviously the put side is completely breached. Tesla, I opened last Friday at 360, and Tesla's at 388. So 388 versus 360. UPS was an earnings trade that I think went well, but I wasn't able to close it because it was November 6th. I ended up selling a call spread just to collect some extra credit. So I'm at 155 is my short strike, and UPS is at 157. I've got Visa that should be a winner, but for some reason Friday when everything dropped, wasn't able to take advantage of it. But it did end up trading very close to 185. Hopefully this week, if it comes close to 185, I can close it for something decent. It's an iron butterfly now. ZM I talked about, and I've got a new ZM put spread that I opened on Friday when ZM dropped even more. So I'm at 430 on this new ZM put spread. ZM usually goes up when the market is tanking, but on Friday it decided to drop. Just my luck. In my TFSA, I've got 543 cash Canadian, 31K US cash. The positions I have are mostly dividend stocks. They're all down, of course. Not more by than 10%. So they're each $1,000 each, and actually some of them are up. RioCan is up, and Bank of Nova Scotia is up, but everything else is down. I might buy some more of them, $1,000 chunks, if they drop by more than 10% or 15%. I actually have an order, a good till cancel order on TD to buy some more TD if it reaches 56.7. Now, with the 31 available cash, I am thinking of maybe doing covered calls on Apple because it fell a lot, so it's cheaper. It'll take about $10,800 to do covered calls on Apple. Or I'm just going to keep buying $1,000 chunks of stocks that drop hard and just wait for them to recover. So I could be not even swing trading, just buying and holding stocks that drop hard, stocks that I like. But just putting in $1,000 at a time, so dollar cost averaging just in case. Because I want to make sure that I'm prepared in case we go through a 10-year period where the market just doesn't move or keeps dropping gradually, or something like 2000 to 2003 where it was a 3-year bear market. So if I buy Apple, for example, at 108 and we go through a 3-year period where we just drop gradually, even Apple will drop. Everything drops. So that will hurt my portfolio. I'm not sure if I'll be able to collect enough premiums from the call side. Depends, of course, how low the stock goes. So I find the best way to prepare for something like that is to not deploy all your capital in one shot. Just to always have some cash on the side so you can dollar cost average. But if I have to buy 100 shares of Apple at once in one shot, then I'm deploying $10,000 in one purchase, and then the only way to dollar cost average is to put in another 100 shares of Apple, which I can probably afford if I consider that I have 31K US. But that means I'll have 20K that's not doing anything for me, just sitting on the sidelines, just to getting ready to purchase something in case the market drops. So you have to consider the opportunity cost of cash not being invested. In my RSP, I'm sitting on 1,300 Canadian cash and 5,700 US cash. My positions, I've got 3 covered calls. I've got IWM, I've got Virgin Galactic, and I've got Work or Slack. IWM, the stock has dropped a lot. Remember, it was in the 160s. It's at 153 now. So I'm up only $148 on the shares, but I keep rolling my covered call at the same strike. So see, that's the advantage of rolling calls, even at the same strike, because when the market drops, well, I've been collecting better premiums than if I was selling out of the money calls. So if I go to orders, executed, filter on IWM, once again, you can see all these credits that I'm receiving every week at $105, $120, $100, $100, $42, $90. This is just weekly premiums that I'm collecting from my 100 shares of IWM that is right now at break even almost. So if I had just bought and held IWM, I'm only up $148 right now, and I bought this stock in February, I believe, and I would only be up $148. Instead, I'm up maybe $2,500 because of premiums that I collected from selling calls against my 100 shares of IWM. I've got Virgin Galactic that I rolled. I'm down a lot on the shares. I bought it at 23.6. It's trading at 17.4. It's got earnings this week, so hopefully it comes up, but I think it might continue dropping. So I'm down $620 on the shares, but I keep collecting premiums. Not as high as IWM, but still collecting some premiums from Virgin Galactic. And obviously it's not every week. I end up going a little bit further. As you can see, this one's 46 days away. And work, I just started work 2 weeks ago. I bought it October 21st, I believe. And I bought it 28.6. It dropped to 25.5. So I could have gotten a better entry if I just waited a little bit. But anyways, regardless, I've been collecting premiums on work. If we go to orders executed and filter on work. So the first time collected about $1.30. And now the second time collected $64. We'll see what happens as we go. Right now, the next expiry is November 20th. So you see, I had to go a little bit further because the stock dropped a lot, far from my strike of 28. And the reason I go for a 28 strike because I don't want to lose my shares lower than my purchase price. And in my RESP, you've got 95 Canadian and 219 US. But my position is terrible. I've got Intel, which has dropped to $44. So average cost of 56, and the shares are at 44. So I'm down 1,100 on the shares, and I just keep rolling call options, keep collecting premiums from Intel. Not a lot, of course, because I'm really far from my strike of 55, as you could see. And I had to go all the way to February 19. So 109 days away just to collect $50 on a $5,600 investment. So that's the problem with covered calls when you do it on a stock that drops a lot. So yeah, so this was my portfolio with Questrade and my intention or my plans with each type of account. So if you have any feedback, any comments, leave in the comment section below. And like always, if you can open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free trades. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.